What's up, tycoons? What's up, traders? Super excited for today's video. Absolutely crushing it in the Discord today. We're making profits all over the place. Okay, everyone's making money in the Discord right now. Really amazing day in the market. As always, the content provided on this channel is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. There's some big warning signs that we need to go over and where those could potentially lead and what maybe people are getting wrong about that. That's what we're going to cover in today's video. So be sure to watch through the full thing. It's going to be a really good video. Okay. I try to give you guys all good content, no fluff, and we're going to get straight into it. Now, today was just an amazing day in the market. Okay. We're having 300% trades all over the place, 400,000% trades. Even some of the new members are, making money in the Discord. We have the gift queen right here. She's just absolutely killing it. 629% profits. And we're trading lots of things. Okay. Besides just equities and stocks. You can see we have all the TLT call outs right here. All right, in the small cap call outs, because TLT, option contracts tend to be inexpensive. We have nest eggs as well. These are basically our leap option contracts that we're getting into. And, these are just some of the plays that we're interested in right now. But the big thing that I want to tell you guys is that big tech stocks could drop if AI progress disappoints. A rally in tech stocks has made valuations more expensive. And so if we take a look right here, right, NVIDIA is the big AI stock that everyone talks about. But the NVIDIA PE ratio right here is actually in red. And then we have the NASDAQ 100 PE ratio here in black. And so you can see that the actual NASDAQ PE ratio looks super expensive compared to NVIDIA's. Now, when you look at the chart, it may be a little bit misleading, but that's because of the crazy earnings call that NVIDIA had here recently. And we're about to start another massive earnings season. We've already started it with some of the banks, but we're about to start seeing tech start reporting this week, and it's going to send fireworks across the market. Now, if the AI progress disappoints, we could see and potentially give up a lot of these gains. Now, does that mean that the market has to crash another 20% and head into a new bear market? No, I've dropped many videos and I have more coming, going over some more of the macro bullish data, showing you guys, we are in a new bull market. Okay. But that's not the emphasis of today's video, right? We want to go over some of the potentials here. All right, if we take a look, the near-term profit downgrades are outnumbering upgrades. And this is the earnings revision index. And what we're seeing here is we're seeing big downgrades, okay? And, we're seeing nothing but the stock market going up. Meanwhile, we have all of these downgrades present in the market. And if you take a look, okay, an equal weight Big Seven portfolio, which this is what they're calling it now, the Big Seven, the Magnificent Seven. All right, I'm sure you guys know what the stocks are. In that stock, basically, if you went into an equal weight portfolio of those, right? So not even market cap weighted, that's up over 33% in less than 3 months. And this really just emphasizes the point, guys, that these are some of the top companies in the world, right? We're looking at Apple, Microsoft, Amazon, Meta, Google, Nvidia, and Tesla. All right. Whether you like their CEOs or not, whether you like Elon Musk, whether you like, Mark Zuckerberg or whatever, these are arguably, some of the top companies in the world. Let's just call them 7 out of the top 10 or 7 out of the top 20 companies in the entire world, guys. And, you have to remember that, right? A lot of people get fearful of these names, and we're, really terrified of these names in the bear market. But, when you think about where else you're going to invest, right? I mean, are there really companies out there better than Apple right now? And when you look at the AI bubble that's forming right now, I mean, Nvidia is, if you think of it like the gold mining era, okay, and the gold rush, Nvidia is the one selling the pickaxes, right? They have the best AI chips. Now, they are pretty ahead of everyone else, but that may come to, an end and things may change in the future. But for right now, they're selling, basically the best shovels, the best pickaxes and things like that to mine the gold and to find gold. And today's gold is actually going to be AI, right? So just wanted to point that out to you guys, but if the AI, again, if the AI earnings, disappoints, we could see a lot of these valuations and a lot of these rallies that we've seen potentially give up. Okay. Microsoft has been a stock that we've really just been absolutely slaying in the Discord. I've been in and out of this one many times. I'm completely out of Microsoft. There's still many members in the Discord in Microsoft. But look at this giant increase. Okay, this is the daily market cap change. Okay, this is not the market cap change over a long period of time, and this thing went up over $1 billion, guys. Just I mean, we're just seeing massive amounts. This is almost $150 billion in a single day, guys, in a single day, right? And actually, if you take a look at this point right here, it actually did increase $150 billion in a single day in market cap back in May of 2023. So, I mean, this is just crazy. Microsoft has been nonstop coming out with news. They just announced news today, basically including AI in their Microsoft Excel and, basically their Office 365 features. I think that's going to cost about $30 a month, which is basically the price of ChatGPT. I think the price of ChatGPT Plus is around $20 a month. I'm not sure. I have it. I pay for it, but I don't know the exact cost. And it's not a surprise that we're seeing that as Microsoft owns, a big chunk of ChatGPT. If we take a look, this kind of just backs up the data right here, basically emphasizing that, if earnings season does come in bad and the, AI earnings stocks really ends up disappointing, that falls in line with seasonality and cyclical data, right? If you take a look at the July market performance in pre-election years, what we see here is we actually do typically tend to get a peak around that 10th trading day of July. Now, remember, this is not calendar days, this is trading days, and we do have the holidays in July. There was 4th of July, things like that. So, these are things you want to consider. But typically in the last, 10 trading days is when we start to see a sharp decline in the NASDAQ. All right. The dotted blue line right here is the NASDAQ in pre-election years. And so that's potentially something that may come right now. This doesn't have to be true, right? I mean, the market's been continuing to rally. And the big thing that I want to point out to everyone that the people may be getting wrong, right? If we go back a few slides here and we take a look, all right, at the massive amount of downgrades for earnings revisions, this makes it very easy for companies to beat earnings expectations, right? When you have these massive earnings revisions downgrades, it's much easier for companies, and it's almost like a cakewalk for them to beat these earnings reports. And a lot of people are worried about Tesla, okay, because they did a lot of price cuts. One thing that I just want to point out from in-store experience, right? We actually went into the store and they're selling cars like crazy. They're convincing people to buy cars. They're giving store discounts in store. So, if you're trying to buy a Tesla, it's better to actually go in store. All right. Because you're going to get some potential discounts and things like that, and they're just crushing sales numbers, right? And we saw that when they released their sales, and basically how many units they're moving and stuff. So it just makes it really easy, right? And Tesla has had all of these downgrades. People are really worried about the margins as they've continued to cut prices. People are worried about the balance sheet for Tesla. These are all things to be definitely worried about. But it's very interesting to see how it plays out. And, if Tesla, if a lot of these other stocks, these big names are going to be able to beat expectations after such big downgrades, right? That's definitely something you have to consider. Now, I'm not trying to pump Tesla for earnings or anything like that. I have no plans to play it during earnings or make a trade on it for earnings. I'm fine. There's other stocks that I can play, and Tesla's not going to be my one, but I just wanted to give that one example because, we did actually, go into the store there, and they're convincing people basically to buy Teslas instead of lease them, giving discounts so that way that they can have some really good numbers, which again may affect their margins. All right, but when you look at deliveries and things like that, that's a really big headline for Tesla. We saw how that affected the stock price already. Now, while many are debating whether 30 to 35 times earnings or 7 to 40 times sales for the mega caps is an expensive valuation or not, the answer, in our opinion, lies with whether the Fed will continue to provide the low-cost funding this financial engineering requires. If it does, then perhaps these multiples are moot, and I can put away my analyst hat once again. This leads us to the real cause of the US equity market's launch higher in March of this year. And while many of you think it was AI, there was something more important going on behind the scenes. The Fed once again increased its balance sheet by nearly $400 billion to support the banks that thought low interest rates would exist forever. Not surprisingly, the S&P 500 has rocketed 15% since the new liquidity injection, with investors thinking we're going right back to the good old days again. Now, before I go into the next slide, okay, which is actually going to have the Fed balance sheet on a chart with the S&P 500, one thing that I do want to point out that I disagree with slightly in this is that while many of you may think it was AI, we're about to take a look at the next slide. Let's go ahead and do that real quick. All right, and come over here. And right around here at the market bottom is literally when ChatGPT came out to the public. Okay, literally right around the market bottom. Now, is that a coincidence or not? Right, that's the big question right here. But to me, it's definitely not a coincidence that shortly after really the market bottom shortly before ChatGPT was launched, but I'm not 100% sure, but I'm pretty sure the beta was out in October and we ended up bottoming in October. And to me, it's really not a coincidence that, we're seeing just, these really, really insane market gains and this really big push ever since the AI. And I do think that AI has had a significant impact in this market rally on top of the Fed balance sheet, right? Which is something that I really wanted to emphasize, right? So, we have some vertical lines here. We have a horizontal line. This vertical line here is when, basically the bank collapse happens, okay? And you can see the Fed balance sheet here in orange, and we have the S&P 500 right here, on the candlesticks. You can see that once we got that boost up, the stock market started raging, guys. It absolutely started raging. Now, it has gone back down, and the reason being is because they're doing quantitative tightening, right? And they still have QT going on behind the scenes. A lot of people have stopped talking about QT. But the main thing that I wanted to point out to you guys is how much the stock market follows the Fed balance sheet, right? And I've covered this in multiple videos before. I have almost an entire, a couple videos dedicated entirely to the subject. But I want to use this vertical or this horizontal line right here to show and highlight where the Fed balance sheet was. Okay, so if we take a look, here's where the Fed balance sheet is right now. Okay, here's where it was in the past. And take a look, if we were to draw a horizontal line from where the Fed balance sheet is right now compared to where it was back in 2021, all right, and we draw a horizontal line right here, you can see that we're literally only a couple points higher, guys. We're not a significant amount higher. And so basically through all of this, it kind of just goes to show that the stock market really does follow the Fed balance sheet, right? We're slightly, above where we were in the past once we were at the same exact level where the Fed balance sheet was. It's definitely something that I think people need to pay attention to, especially when they're looking at a more macro analysis, right? If the Fed balance sheet does start to go up again and start to rise, that's definitely something you want to be aware of, because the Fed is very, very impactful in today's market and in the environments that we have when it comes to the stock market, right? We can see the peak right here back in January of 2022. And then, the Fed balance sheet starts to really taper off, right? This is when people were starting to get really fearful of interest rate hikes. And then we see it starts to go down, it starts to go down. And meanwhile, the S&P 500 is continuing to make lower highs, right? That's exactly what we're seeing here, right? We're seeing high, lower high, lower high, okay? And really, we can just call this a lower high right here, right? So we're making these lower highs, and then what happens? Fed balance sheet starts going back up again. And what do? We've broken the cycle now, and now we're making higher highs on top of that. So Just some important data that I think people need to be aware of. Now, again, if we take a look at the top contributors to this year's S&P 500 rally, we're really looking at Tesla, Meta, Amazon, Alphabet, which is Google, then we have Nvidia, Microsoft, and Apple. Now, the NASDAQ actually has to rebalance because these stocks have been rallying so much that it's too significant of a weighting in the NASDAQ 100. And I did cover that in my last video. So, be aware that the NASDAQ is going to be rebalancing here shortly. By I think the official date is July 24th by market open, it's going to be rebalanced. So that's definitely something to, just be aware of and consider moving forward. Now, there's some interesting tweets here, all right, regarding to the JPM desk. This is JP Morgan. Now, typically, the end of the hiking cycle bull steepens the yield curve. If that phenomenon repeats, then this would be supportive of equities, specifically tech and cyclicals. Now, combine this with increasingly positive macro data, and we may be entering a Goldilocks period. Now, Goldilocks period, and, really just speaking of Goldilocks, is kind of like forbidden words when it comes to analysts and stock markets and things like that. So I think it's really interesting that they're saying that. This has been a topping signal, a couple times in the past. But not only the data that I presented to you guys in today's video about AI and how AI is boosting the market, and also how the Fed balance sheet is boosting the market. But when you take a look at the increasingly positive macro data, okay, and you combine that with the end of the hiking cycle bull steepening the yield curve, all right, this all looks data right here. All right, this all looks like bullish data right here. That's what we've got on these tweets right here. And if you take a look, okay, the JPM desk has got new S&P 500 targets, specifically the SPX, reaching 4,800 to 5,400 over the next 18 months, most likely led by info technology. Okay. So really, really just, amazing claims right here. And I really wouldn't be surprised if that happens. Okay. Now it's a pretty broad range, 4,800 to 5,400 over the next 18 months. They're basically just saying that, within, the next 12 to 16 or 12 to 18 months, they think that, it's very possible we could get all-time highs or exceed those all-time highs. And, I'm definitely not opposed to that, right? We have started a new bull market, and really the entire bear market of 2022, yeah, it was largely in part due to inflation, but it was mostly due to the Fed. Okay. They were doing quantitative tightening. They were also raising rates at the most aggressive pace ever. All right. And now we see in 2023, we've, massively downgraded earnings in the stock market. There is, maybe a little bit more of Fed rate hikes, but at the end of the day, 25, 50, 75 basis points is really nothing compared to the hundreds and hundreds of basis points that we saw in 2022. We've already gotten a pause. The Fed is slow, guys. They're always going to be behind. And so right now, the market is not even so much worried about the Fed. They waited way too long to start raising rates. They're always going to be slow, right? And so people think that they're going to start cutting rates so soon. I don't foresee that happening. But, with all of the other data I presented in this video and some of the other data I presented in other videos, I think that the market is pretty much getting over the whole Fed bear market, and that we're through that. And now we're really going to need to see inflation really kick back up and really be a problem for us to potentially have some, bad scenarios in the S&P 500. Otherwise, maybe things are just a little bit overvalued right now. That's a little bit tough to tell, especially if you're not a professional at fundamental analysis and understanding, price to earnings ratios, price to sales ratios, which is why I want to bring up today's sponsor, which is actually Simply Wall Street. All right, they have their pros doing fundamental analysis for you guys, so you can look up your favorite stocks that you want right now by using the link in the description below. You'll get a 14-day free trial, and it's an amazing free trial. It's an amazing platform. They have an awesome website and app that I've used for a while personally, whenever looking to make some share purchases. I definitely always want to look at the technicals. You guys know I'm a technical analyst, but I also want to look at some of the fundamentals, and they do a really good job of breaking down those fundamentals, giving you guys some nice charts and graphs to compare and really get a good grasp of, what may be a good deal, what's potentially undervalued, what's potentially overvalued, and it helped give you guys some further inference. Okay, now on top of that 14-day free trial, the first 100 people to join will actually be able to get up to 40% off of their purchase. So use that link in the description down below. Hopefully you guys enjoyed today's video, and smash that like button, subscribe to the channel if you guys are new, and share the channel with your friends.